Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, August 28th, the year 2018. Let's talk trading, one trade at a time. That's how we make progress, one trade at a time. Talked about expectations and going on tilt. And there's a trader out there that said something about wanting to see live trades. Well, I mean, by the time I make the video, the trade would be over. So that's not really a live trade now, is it? If you want to do chat room, or maybe I could do a live stream YouTube, but is that really necessary? And does that really do anything? I mean, I've long abandoned trying to prove anything to anybody. It's usually futile because no matter what I did in the past, somebody would say, well, no, that's not quite right. You got to do it a different way. And I was wound up playing their game. And I just decided one day, this is stupid. I quit. I'm not going to play their game. I'm going to play my game. I'm going to do it my way. And those who applaud will applaud, and those who boo will boo. It's just that simple. I'm not out here to try and convince any person in particular about anything when it comes to trading. I mean, we're going to take this one trade at a time. Some of those of you who've watched my videos now for, days, weeks, or months realize that, hey, you know what? This stuff works. I just let the results speak for themselves. But see, my results don't matter. It's your results. So when a trader say, hey, I've been doing that gap fill and it's been paying off, or, I've been doing that rat zone and it's been paying off, that's all I need to hear. Anything else, it doesn't really matter, you know. And then when somebody tells me that, hey, you know what, this money and risk management screen really helped, I was struggling. Now I get it. It really is simple. Um, that's just it. Now here we look at the month. Where's the yen? Weren't we like at 111.11 or something, or '07 yesterday? Not much movement, right? Then you look at the week here. We came out of that upper weekly wick zone, and once again all the gaps filled. You see right here, and you see over here in the dashboard we've got the weekly wick and we've got the daily wick, and you can see what's going on here with the yen. We're not in a wick zone. We crossed below the top wick zone right there. Okay, actually, XBT means cross below top of the candle, yesterday's candle right there. Then we look at the daily. You can see here it had a tiny breakout, then came right back through, came out of that wick zone, entered the lower wick zone here, and is trying to get out of that lower daily wick zone. Actually, I guess technically it looks like it's out of the daily wick zone. I have to look closer there. And you can see here range is only 40, only 2 over 100, with the euro yen clocking in at 63, a little over 50% more. That's why I think starting in September, you're going to start seeing euro yen screens. And the buy zone, over a decade old, still proving to be profitable. Here went down, but no trigger here, profit to be had. Went above the weekly open, cross below. That should have been a clue. If you didn't take this clue right here, that should have been a clue. When it crossed below that open, the bail, and possibly get short off of the weekly open. But if you follow down to the daily here, wick zone, buy zone, went in here and then reversed out, and you can see here that might have been a clue. Wait a minute, this is heading the wrong way. And so right here, you may have taken a small loss just to scratch that trade. See here, it crossed above the daily open, entered the buy zone, pulled back, went back in, came out. Once again, failure to make a new high, entering out of that previous H1 wick zone. That would just tell me scratch the trade. And you can see here the pivot. We can do that on a couple screens. And once again, there's no real rat zone trading because there's not enough range, 40 pips. See, they're on top of each other. And here we go with the pivot. We took out the pivot once again. Didn't hit that weekly pivot, at least not yet. I'm still looking for that to be breached. And you can see here, we took out the pivot and pulled back below. And this pivot still needs to be filled at a later date, and we'll see what happens. It may or may not get filled, but usually, as you can see, we've only missed 4 before that one missed. And here we go, looking at the price action, and I've gotten a lot of comments and people liking to trade this particular screen here, this particular setup. Got a 1 ball at the bottom, green at the line, 3 ball at the top, red at the line, 2 ball at the bottom, green at the line, 1 ball at the top, red at the line. And you can see sometimes it's good for, dozens of pips. Sometimes it's good for a handful. And more simple horizontal line trading at the H1 candle color at the various lines from the previous daily session. And you can see right here, Randy, real time, we're getting across above right there, which is the wick zone right here. You can see it. See, these lines here and these lines here are basically the same lines. They're not even basically, they are the same lines because we've got the previous daily session high, the candle top, the midpoint. So you could say, well, why do you do both screens? Well, this is emphasizing the zones and how when price gets in here, it rejects it. But this is just taking the cross at the line, going with the candle color. So that's why there's 2 different screens. And here we go. We've got the highest open, lowest opener holo set up. And look at this. That was a nice move to the bottom. And then here, you got a chance to get in at that lowest open just a few hours ago. Actually, just an hour ago. And you see we're up about 8 pips right there if you took that trade. And looking at the inventory reduction bars, you can see here how and where we put in these lines. And there was a long for profit. There was a short for profit right here. This short, well, actually it triggered there. So you should have had profit that way. Once again, with this particular setup, I just look for a handful of pips, 3 to 5 pips. And if it keeps running, I let it go. Otherwise, I will exit with a profitable trade. And looking at the previous day, weeks, months, open, high, low. Once again, you can see here, we just had action right here. So there was the long, and here was the short. We're just trading price at the candle color, or price the candle color at price at the line with the candle color. And you can see right here, we had the bid cross above the valley of the ask, and it's up just a couple of pips. And so if we get the ask crossing below the peak of the bid, you bail out on that trade. So if you want to come and trade at the tick level. And you can see here, I had this portfolio up for a while because usually I only have it up for a few minutes. So I turn the computer on, let it run. So you can see here, we had a short trigger, never went above that open relative line and just stayed in the trade. And that would have been good for over 20 pips. So from here to here, you see there was a potential about 28 pips or so. So if you just wanted to ride it, that's the potential. So once again, very simple trade, the Einstein line. But, what were we talking about? One trade at a time. So yeah, there's multiple systems and methods, but you're going to do it one trade at a time. Some of you can juggle, have 2 or 3 trades or more going at the same time, and that's great. I do that from time to time, but recently I just been focusing on the dollar yen and just grinding it out. And yeah, there's potential other places, but I find out if I focus, I usually do much better. And the whole idea is to get better at trading and find out what works for you and what doesn't work for you. Maybe you need to trade 3 or more to keep you on your game. Otherwise, if you're only looking at one pair, you space out, you start dinking around with the cell phone, or you open other windows on your browser, and then the next thing you know, you missed a trade. Or you missed the opportunity to take profit because price spiked way up. You didn't have a TP set, then it went down and you missed out. So whatever keeps you on your toes, you know it. I don't. So you just do what you need to do to stay focused and stay on your toes. And my inbox has been filled with more webinars going to teach me how to be rich trading and all these fantastic slope indicators and and other things. I tell you, those marketers are really, they're relentless, aren't they? But some people say they found me, they discovered me, they like the simple approach, it works for them. And so they'll hopefully be successful, not because of me, but because they found something that works for them. And that's one of the things you're going to discover as a trader. So you're going to take it one trade at a time, but you're not going to do anything on that one particular trade that's going to hurt you over the long term. Once again, you're not going to go on tilt. And any particular trade might be a loser, and that doesn't mean you have to scrap everything. It's just that particular trade was a loser. The market didn't smile upon you. It's just that simple. So I hope you've enjoyed today's video. And once again, just remember, it's not what you trade, it's how you trade it. So continue draining the banks.